We're going to discuss what I call the accounting equation. Most of you, if not all, are familiar with it. It says that assets equal liabilities plus equity. It also says that revenues minus expenses equal profit, and the profit is added to the prior equity. So equity at any one time is equal to monies that the investors or owners put in, plus any profits that have been retained and not distributed to the owners. So it's assets equal liabilities plus equity. So you know that debits must equal the credits. Debits will increase assets and they will increase expenses. Again, debits will increase assets and increase expenses. Debits decrease liabilities, decrease equity, and decrease revenues. Again, debits must equal credits. Debits increase assets and expenses. Debits decrease liabilities, equity, and revenue. Credits, on the other hand, will increase the liabilities, equity, and revenues, and credits will decrease assets and expenses. I remember well that when I was a student taking Accounting 101, the professor explained to us that that's the only thing you really had to memorize in accounting, were the impact of the debits and the credits and the assets equaling liabilities plus equity. And it's really, double entry accounting is really a control feature. And it's an amazing invention. It was created at least 500 years ago by an Italian monk named Luca Pacioli. He was a mathematician. He published a manuscript in 1494. One of the chapters was called The Mathematics of Commerce. And that's where you find this accounting equation that we're talking about today. Some people say Pacioli invented double entry bookkeeping. Some say he did not, he simply documented it. Cash basis accounting, which we discuss in another film, can also be used with debits and credits that must equal. But in that case, all debits are expenses and all credits are revenues, and you don't have, per se, any assets or liabilities. So the beauty of Pacioli's invention, I call it invention, some would say documentation, is that it was invented or documented over 500 years ago. It is literally, not figuratively, but literally unchanged. It's in use throughout the entire world. And there just are almost no other inventions like that, other than maybe, as I've noted here, the fire, the wheel, and writing. So it's an incredible invention, and it's a control feature. It's important as an accountant to understand and appreciate it, because a lot of times when a business is going to enter into some kind of transaction or some type of new venture, management and shareholders will want to know, well, what's the effect on the balance sheet? Or what's the effect on income? Or more broadly, what's the effect on the financial statements? So you really, you're generating an asset. It has to do something on the other side. It has to balance. It's a real control feature. I know many times in my career, when we talk about having to make adjustments or should make adjustments, management, shareholders want to know what's the impact. Now, a couple years ago, in 2011, a book was published in Australia entitled Double Entry. A year later, it was published in the US. And it talks about the creation by Pacioli of double entry bookkeeping, the accounting equation, and the impact that the authors believe it had on the Italian business community and international trade as it was then known. I think as an auditor or an accountant, you sometimes know that something is wrong in the books and it needs to be corrected, and you aren't sure how to come up with the adjustment. And what I recommend is, with the double entry system in mind, you draw a series of what we call T accounts, cleverly called T accounts because it's like a T, and debits on one side, credits on the other. A lot of times what's handy if you're an accountant or even a bookkeeper, and you know something's been done that's wrong, a transaction was not recorded right, what you can do is draw all these T accounts on one piece of paper, record what happened, how it was recorded, and then take another set of T accounts and record it in the T accounts the way you know or believe it should have been done. So you have two sets of T accounts, net debits or credits, what should have been done, what was done, and the adjustment you need is to simply increase or decrease the old debits and credits to come in line with the ones you now know are correct. So again, the beauty of the accounting equation, assets equal liabilities plus equity, revenue minus expenses equals profit, and that goes into equity. The beauty of it is it's basically a control feature, and it is good. It's been around for 500 years, and it's recognized and used throughout the world.